You've probably heard about the Rolex waitlist. Well, here's the truth. It doesn't exist. It's a myth. So how do people really get offered the hottest watches at retail instead of paying 2 to 3 times more in the secondary market?
It all comes down to relationships, and today we're going to break down how that works and what it means for you as both a collector and an investor. And that's what makes this game so fascinating. The watches are real, the equity is real, but the access is extremely limited.
I'm Kenji, here again with Josh. In our last video on luxury watches, we evaluated how they fare as investments using our Fastfire investability scale, looking at return potential, risk profile, and accessibility. Today, we're going to dive deeper into one of the most important factors we highlighted, accessibility. Because even if the return potential looks strong, if you can't buy at retail, you're forced to pay inflated secondary prices. And today, we're tackling the question we get over and over. How do you actually buy these watches at retail from an authorized dealer, or AD for short, instead of paying the crazy secondary market prices?
Let's start with the numbers, because once you see the price gap, you'll understand why investing a little time learning about this is worth the return.
Because the truth is, there can often be a huge gap between retail and secondary market pricing. But there's also a huge difference in accessibility. And if you don't understand how the game works, you'll never get offered the chance to purchase certain watches from an authorized dealer at retail pricing. Today, we're going to break down some of the steps you can take to become one of the select few that get offered a chance to purchase a luxury watch from an authorized dealer.
Let's start with some numbers to help illustrate how significant these price differences can actually be. Let's start with the Rolex GMT Master 2 with the iconic Pepsi bezel. The retail price for this watch is $11,300. On the secondary market, however, this watch sells for $25,000 to $28,000. That's a 2x increase in value. Another example is the Patek Philippe Aquanaut model 5167A-001. Retail for this watch is $25,958. However, on the secondary market, this watch sells for $75,000 to $85,000. That's a 3x return. Finally, the Armand Piaget Royal Oak Jumbo model 15202 ST. Retail for this watch is around $22,000, but good luck finding one under $80,000 on the secondary market today. That is over a 3.5 times return. So buying at retail isn't about saving 10 to 20%. It's about capturing tens of thousands of dollars in instant equity.
Exactly. For high-income professionals, that's like buying a stock that's 2x undervalued. You've locked in value the second you walk out the door. Of course, there's a reason everyone isn't doing this. Access. These pieces are rare and the allocation is razor thin.
Let me share a personal example to show you how limited these allocations really are. At a Rolex boutique I visited in San Diego, California, they told me they only receive 4 Rolex GMT Master 2 Pepsi models per year. 4, that's it. And with those 4, the authorized dealer has to decide from a massive list of interested clients who's fortunate enough to get the call.
Most people think, no problem, I'll just get on the wait list. But here's the reality, there's no wait list. Not in the way most people imagine. It's not first come, first served. It's not purely about how much money you have either. Instead, it's more about relationships and fit. And this is where a lot of people get frustrated. They think, I make plenty of money, I should just be able to buy one. But in this world, it doesn't work that way. It's about trust, reputation, and whether the authorized dealer thinks the watch is truly the right fit for you.
So how do you build that relationship? First, you simply show up. Go into an AD regularly. Don't just bulldog your way in, asking for a Pepsi or an Aquanaut and then disappear. Stop by, look at the new releases, ask questions, try on pieces. Be present without being pushy. Second, share your story. When they ask about your hobbies, your work, your travels, don't brush it off. This isn't small talk. They're building a profile of who you are so they can place the right watch with the right person. Third, buy what you actually like. Maybe it's a Datejust, maybe it's a Tudor. Each purchase builds credibility. The AD sees you're here as a collector, not just chasing a hot flip.
And here's an insider tip we've seen from seasoned collectors. Find an AD that carries multiple brands. That way, you're not boxed into asking for one ultra-hype watch. You can show genuine interest across different lines, and that builds your profile faster. Also, get involved in a collector community. Attend watch meetups. Join local or online groups. When an AD knows you're plugged into the horology world, it gives you credibility. They know you're passionate about watches, not flipping for a quick buck.
In the big one, be approachable, friendly, and open to dialogue. Remember, they're curating. If you shut down every suggestion and say, I only want the Pepsi, you're really just hurting your chances of getting the watch you want. But if you're open to discovering what might fit your lifestyle, you're showing them you get it.
On the flip side, here are mistakes that will absolutely shut you down. Being rude or transactional. Money doesn't buy you goodwill here. If you're unpleasant, they won't want to work with you. Tunnel vision. Only asking for one of the most popular models, ignoring everything else, can make you look like a flipper. Hinting about resale. Even joking about how much you could get online is a huge red flag, and nothing will destroy your chances more. Flipping with the wrong intent. Watches are traceable. Serial numbers are tied to your name. If it resurfaces too quickly, ADs and brands will know and will be very unlikely to do business with you again. But let's be clear, it's not that you can never sell a watch. Collectors do. The difference is intent. If you're transparent and clearly building a collection, you're fine. But if you look like a short-term profiteer, you're done.
Exactly. We've heard of people being completely cut off, not just at one store, but across the brand. And once that happens, the odds of you getting back in are extremely small. Let's zoom out a second. Even if you get a watch at retail, you need to understand the market dynamics.
Trends shift. What's hot today may cool off tomorrow. Macro events matter. Recessions, tariffs, global demand changes, and even brand strategy like discontinuing a model can change desirability, affecting the price.
Condition and service history are critical. Over-polishing a case, losing a box or papers, or service it incorrectly, and you could potentially destroy thousands in value.
So think long term. Ask, will I take care of this piece? Will I enjoy it for years? Will I pass it down? Because if you approach it that way, you'll always be on the right side of the market. Now let's bring it back to investing. If you can't flip for quick profits, how can these be investments? Think of them as stores of value. They're portable, borderless, and globally recognized. A Rolex is just as sellable in San Francisco as it is in Tokyo or Singapore. Studies have shown that luxury watches, especially Rolex, Patek, and AP, often have lower volatility than real estate or bonds. They're not stocks, you won't see 30% annual returns, but as a hedge and a diversification tool, they're powerful. Steel sports models often appreciate fastest, but precious metal watches made out of gold or platinum carry intrinsic value. Over decades, as the value of gold or platinum rises, so does the value of the watch.
And don't forget, knowledge is everything. You don't have to sell, but you do need to know which models trade at a premium. That knowledge keeps you from overpaying, and it makes sure the pieces you buy are truly assets and not liabilities.
So here's the big takeaway. Retail versus secondary isn't about how much money you have, it's about relationships, patience, and knowledge. Approach this world as a collector, not a flipper. Respect the process, and over time, you'll unlock opportunities most people never will.
And when you do, you're not just buying a watch, you're capturing value, building legacy, and joining a global community of collectors.
If you found this helpful, hit like, subscribe, and let us know in the comments what you're chasing right now. Thanks for watching. We'll see you in the next one.